In today's video, I'm going to lay out my case for why I think XLE is setting up for a nice short side setup. We'll look at XLE in today's video, we'll look at USO, and we'll look at the crude oil futures. Now starting first with XLE, if we take a look at what price action is telling us, you can see that in this entire rally, you had these wedges forming. Those wedges told you that, hey, price is outside of the 3.0 Keltner channel bands, and we're closing outside of the upper bands. So that's our first sign that we're looking for a reversion to the mean. After that, we had the edge signal confirmation, and in this edge signal, we entered what I think most folks would recognize as a bull channel. In this overall bull trend, we were having our little pullbacks back and forth, back and forth. Now currently, we're in the middle of our trend channel, and with today's activity, it feels like we have a slightly more bearish close. If we load in our momentum cross here as well, I think that helps to paint a little bit more of the bearish picture, with the bears reversing momentum, the bulls trying to defend, and the bearish just slapping them straight back down. Now with today's price activity, we're also pulling back into previous support turned into new resistance. That's why I think XLE looks fairly interesting here. But XLE alone still, you could argue, is very much in this bull trend. We need to find some other ways to get excited about this. If we look at USO, USO had a similar pattern here, the same one I just talked about, the bearish trying, the bulls trying to reverse, but the bears bringing price action straight back down lower. And in the case of USO, you can see the market pulse has also switched trend colors from the stage of acceleration to now a stage of deceleration. Now we're a bit of a ways from the market pulse, where to get excited about the entry, I think you would want to have some sort of a pullback, an entry closer to that 78 price mark. So in USO, we're a little bit away from that versus XLE. I think you could still argue that there's some reason to try and get short price here. You're looking for a resumption of this bearish trend. Now, if we take a look at crude oil, for those of you that like trading futures and day trading, I think if you enter the chart of crude oil with this bearish overall bias, that sets up for some interesting short side opportunities that you can take advantage of. Here I have crude oil loaded. We're on a 1 minute time frame chart, and I'm on the scalper models, and you get an idea of how price fluctuated for most of the day today inside of our scalper volatility box models, not tagging either side. Then we enter that 9 to 10 a.m. Pacific hour. This is the lunchtime hour for the East Coast folks, and you can see how price action changes here. The behavior of price and the volatility takes a dramatic shift in this lunchtime hour. Very quickly, price accelerates to the upper end of our volatility box zones. Remember, we have that bearish bias looking to try and get short up here, and you would be trying to essentially play this move for the times that you do get that larger puke. In the case of crude, this setup wasn't too interesting for me given that it happened in the lunchtime hour, but I think it still helps to illustrate how you can take advantage of this bearish lens and look for these breaches throughout the day with the focus on the short side setup here, given that we have an overall short side bias. So that's XLE. The last thing that we can do to really get a complete picture is layer on our seasonal analysis tool to get an idea of what does performance in the month of May typically look like for the 3 different markets we just evaluated. So if I load in just the seasonal analysis indicator, and we go back instead of 5 years, let's go back maybe, let's say actually max available data here. With XLE, we get a chance to see that May is not really all that strong of a performing month. In fact, inside of XLE, February, March, and April are, and we just came at the tail end of what should be one of the stronger months. This bearishness is from May all the way through about September, and then October, November, price starts to perk back up. So with seasonal analysis, XLE, again, we're adding to this idea that we are looking for a little bit more bearishness, and May picks up in June, July, negative overall month as well. August and September looks to be where you're really looking to take off most of your position. If we looked at USO here with a similar idea, USO, we see a slightly different picture. It's not like 52.94% gives you all that much hope, but the fact that this label is green with both our numbers being positive here, 52.94 for how often May is a positive month, and 1.46% for how what is the average percentage, for the gain for that month. That tells us that, again, XLE offers a slightly better opportunity here. And finally, if we look at crude oil, same idea looking at May, crude oil so far, let the data load, you can see similar to USO here, where May is that hit or miss month with our number being very close to 50%. In a lot of cases where we have strong seasonal trends, to give you an idea, that number is closer to, say, 70% plus. And that's what we're looking to see here. We don't really get that across the board in May. And XLE seems to be the market which is the weakest out of the bunch and just so happens to be setting up a nice, just technical analysis setup. I hope you found today's video useful for those of you looking for a new, let's say, swing trade opportunity that lasts more than just a few days, but instead a few weeks. Take care, everyone. Good luck trading, and I'll see you in our next update.